All right, good morning and welcome back to the Money Advantage podcast. I believe that we're live, so we're going to go ahead and jump into our conversation for today. We are going to be talking about insurance and really protecting your family and making sure that you have all the protection that you need. We have a special guest joining us today, and that is Meaghan Dowd, and I'm really pleased to be able to bring her to the show and just be able to share her expertise with you as we get started. So welcome, Meaghan. Thank you for joining us on the Money Advantage podcast.
Thank you so much for having me. I'm excited to be here this morning.
Awesome. And Bruce, good morning to you. I wanted to just go ahead and get your thoughts about this conversation really at the top of the show today as we're diving into something that is really critical and important for our listeners to be able to understand.
Yeah, I met Meaghan through Mike Kitco, and some of our longtime listeners would have remember that he's been on the podcast before. His company Inner Wealth, and Mike makes millionaires into happy millionaires, and so everybody that Mike surrounds himself are happy people, and so Meaghan's very much the same way. And I know a lot of people are going to have questions like, why should I listen to this particular podcast today about property and casualty insurance and so on and so forth? But I'm always amazed at people's laissez-faire attitude about property and casualty insurance, and they do not actually check on it. All they do is just pay it. When they get their renewal, they don't know that there's different things that you need to actually pay attention to, such as your different limits, what you're actually being is actually being covered in your policy. It's a contract, and we harp on this all the time, Rachel, about life insurance being a contract, and I believe PNC insurance gets bad raps a lot of times through the cocktail circuit and the barbecue outdoor barbecue circuit, where people say, oh, insurance companies just they ripped my friend off, or they ripped me off, or they didn't pay for this claim, or so on and so forth. And I find that to be just mostly untrue. It's what ends up happening is people don't take personal responsibility because they didn't actually have their contracts set up correctly at the beginning, and they don't want to blame themselves, so they blame the insurance companies. And I would say take control of your insurance life, just like we espouse all the time.
Mm-hmm.
And I will end this by saying that Meaghan and I have had conversations, and she has kind of the same type of philosophy that we have, and that is that you take responsibility of your financial life. I'm still confused about why property and casualty insurance is required by state lawmakers, and yet life insurance isn't required by state lawmakers, because we have property and casualty. There are people that go their entire life without actually using a claim, making a claim, but there's nobody that's going to go through this existence on this earth without dying.
Mm-hmm.
So we've covered that topic a bunch, but now I think it's really important that we cover what our listeners can do with their property and casualty. And I'm always amazed. I've made this comment on the show before. People will actually cross a busy highway to get to gasoline where it shows 2 cents cheaper per gallon. They put 10 gallons in, and they save 20 cents, but yet people don't do anything to actually shop their property and casualty insurance. And so I think this is going to be a very valuable episode.
Yes, absolutely. So let's go ahead and jump into the conversation. Before I do, I want to give a bio to you about what Meaghan is all about and her background, just so that you kind of have a perspective why she is somebody that you should listen to in this insurance, specifically the property and casualty insurance space. And so she is not just a person who can help you with the insurance. She's also a passionate educator. And as you know, we love educating on this show and really empowering you with the ability to make good decisions because you have the information available to you. So I love that about Meaghan. She serves as an advisor, an insurance educator, and claims advocate. So we're going to hear about all of that as well. With over a decade of personal insurance experience, Meaghan is devoted to helping her clients understand their risk, then implement risk mitigation strategies. Don't tune out here. Risk mitigation is just simply you're transferring risk or minimizing the risk to yourself, And then she's helping them to provide adequate coverage to protect their lifestyle, which is also, I believe, if I jump forward here, I believe that is the title of your book. Is that correct?
That
Protect
is
Your
correct.
Lifestyle.
Yes.
So
Kept it simple.
education is really a cornerstone of her practice. She's the author of Protect Your Lifestyle. Here we go. Make empowered, educated, and effective personal insurance decisions. So, as she continues to grow her knowledge in the space, she's most recently earned the Certified Advisor of Personal Insurance designation, which is really awesome, through Wharton Executive Education. She also holds the Chartered Private Risk and Insurance Advisor, Personal Lines Coverage Specialist, and Commercial Lines Coverage Specialist designation. So, what this means is that Meaghan is not just talking the talk; she knows what she's talking about. So, let's go ahead and jump in. Meaghan, again, thank you so much for spending your time to talk with us on the show today.
Of course, I really appreciate it. I'm excited to talk not just about, again, your typical home and auto that I think a lot of people equate personal or property and casualty to, but everything else that really encompasses that world.
Absolutely. So first of all, let's just share, how did you get into the insurance space? And Bruce, you commented here in the chat. I just want everyone who's listening to hear me as well. If you have questions, any question under the sun about personal, home, and auto insurance, please go ahead and put those into the chat today, because we want to make sure that we address the things that are on your mind. So Meaghan, how did you get into this space in the first place?
So like most people in insurance, I didn't, go looking for insurance. While now I'm in it, I think everyone in college should definitely look to insurance as a career. It's phenomenal, and there's a lot of different avenues. But I got into it working in the back office of a title company. I was in college at UMSL and was just looking for a job to get started. And so that's where I kind of landed. I definitely thought I was going to be an attorney, but I really loved just learning. And I'll kind of get into, that's one reason I wrote my book, was just understanding how people get into insurance. They're kind of thrown into it and they learn their way through it. And that's really at the detriment to consumers. And so being an educated consumer is an important piece to this project.
Oh, absolutely. So, can you share then, as we kind of dive into the topic of insurance in general, what is the first thing that you wish people knew about insurance, rather than hearing the word insurance and kind of tuning out, as I think a lot of people do? What is the number one thing that you wish people knew that insurance is all about?
It really can make your worst day okay. Like, I think a lot of people want it to make their bad days okay, and it's not here to make your bad days okay. It's here to make your worst days okay. It's really here for when you're in that awful car accident, your home burns to the ground, and you financially can't do it yourself, and you don't even know where to start. You need that team of professionals to help navigate that situation. And so, whether you're worth nothing or you're worth $10 million, insurance is still a very important piece to your overall life, and how you utilize it can become just that much more important.
You know, Meaghan, this is reminding me back to some conversations, Bruce, you and I had 5 years. I don't even remember how long we've been doing the podcast, but way at the early years of the Money Advantage. And every time we have this conversation, I'm blown away by how long it is. 7 years, 5 years. It's been a long time. But we've had conversations really about how to make sure that you're keeping as much of your cash flow as possible, and then protecting your cash flow before you think about how to make more money. And a lot of times people jump over that protection component, thinking, well, let me just make a lot of money now, and that's going to solve everything. And I'm just going to increase my income. I'm going to increase my returns, my earnings. But the really most important thing is to make sure that you don't have the ability for the carpet to be jerked out from underneath you, or have that one life event come in and make you poor, as we say as well. And so that idea of having protection so that you don't lose money is really important, especially in those situations where it could be completely financially devastating, right? I mean, we talk about life insurance all the time on the show. This is a little bit of a different area of insurance, but those events, something happening to your home, something happening to your car, sometimes those can be extremely gigantic financial liabilities that we want to make sure we prepare in advance for, so that you can have that confidence to be able to make great financial choices and know you're not going to go backwards.
And the key I do want to put into this whole conversation is, my biggest thing is, I want people to live life, but I just want them to live it smartly. So I don't want this conversation to scare people to not like want to live life. I think it's important just to understand what liabilities come with your choices, and then how to, again, transfer them properly for the ones you're not comfortable insuring.
Mm-hmm. Oh, that's awesome. That is awesome. And yes, the whole reason is so that you can live better, so that
Yes.
you can do more with what you have.
Correct.
So let's go ahead and talk about how do lifestyle choices provide that roadmap to personal insurance planning from your perspective?
Yeah, so again, I think a lot of people start by thinking about their home and auto, but then they don't think about what they do outside their home and their vehicles. So whether that's sitting on a non-for-profit board, or maybe they run their neighborhood association, there's liabilities that come with those. And so if it is a neighborhood association that you run and you're hosting that block party and there's a kid that gets injured, are you liable? Could those families come after you for those injuries because you were the one hosting? Again, that non-for-profit board, while they may have their own coverage, if there's 10 people on that board and it's sued, your personal assets can now be out there for the taking because, again, you were just trying to be a good citizen and provide to your community and partake, and don't understand that again is something that is not only a huge liability, but it can be transferred to the right insurance company from a personal aspect.
I think that's really, really valuable. It was explained to me when we first were making insurance decisions that, if you have your property causing damage to somebody else, that may not necessarily be on your property. So if your dog bites somebody in the park, you're personally liable. And that was really baffling to me, realizing that anything that you own can have the ability to impact somebody else financially. And that can be a decision that we're then financially responsible for. So yeah, thank you for bringing that to everyone's attention as well. That idea that we want to do the most good and have the greatest impact. And as we do, there can be sometimes financial liability that attaches to that.
And then to your dog point, travel is another lifestyle piece that I think a lot of people miss out on or just overlook. They assume their liability covers them everywhere. But the truth of the matter is most liability only covers you in the United States and its territories. So for those people that like to explore outside the US and you like to take your animals with you or just explore by yourself with family, that liability can sometimes not extend to you in other countries. So whether that's renting cars or just, again, taking your pets with you, there's sometimes additional components that need to be thought of when your life spans more than just one country.
Mm. Wow, fascinating. Okay. So, and clearly you are not advocating for people to live smaller lives. So
No.
that is a very good thing to be thinking about so that we can be adequately covered. And we're going to talk about that as well as we go. So, what would you say are additional considerations that a business owner might have beyond those personal lines as they're going into the world and having liability potentially attached to that?
Of course. So there's a few different avenues, and I have to have or be very clear. I'm not an attorney. I was just raised by a bunch of them, so I know enough to be dangerous. But when it comes to business owners, there's, the one thing is, are you running the business out of your home? What type of coverage? Your homeowners has very limited coverage. If you have, your clients coming into your home, your liability is not going to cover your clients coming into your home. So how does that, play into it? But then how do those assets, whether it's the vehicles you drive, so maybe you want to title all the cars in the business name because it's a great tax write-off, but your 16-year-old drives that car. So do you really want to put the business, out there while your 16-year-old's driving if there's that bad car accident? So a lot of times what I see with business owners is they're good at surrounding themselves with a board of advisors to make decisions, but they don't always bring those board of advisors together to have the conversations as a whole and really ask, well, hey, yeah, that's a great tax write-off, but do you really want this exposed liability? Or do you use your LLC properly? A lot of business owners, invest in, structuring, but then they'll call me and pay their business policy with their personal credit card. Well, now we've just pierced the corporate veil and all that work you did with your attorney is completely unraveled. So when it comes to those business owners, it's not just about using the card that's on top of your wallet because it's easiest. It's understanding, am I renting a boat to take clients out, or am I renting a boat for my family and my friends happen to be clients? Like there is that line of what do you want exposed if there's a loss. And again, while I don't want you to think about that every time you pull out your card to like make a memory, it is something that as a business owner, you need to draw the line in the sand and also respect the structures that you've put in place doing so.
So when it comes to that protection of those types of general liabilities, I would presume that the most efficient way is some type of umbrella coverage. We have a question here by Warren, or not actually more of a comment by Warren Barnes. He said, perhaps you could discuss the often overlooked necessities of umbrella coverage. And, this is something that I advocate all the time. I personally have a $2 million coverage, and it's really relatively inexpensive to have that type of coverage. But I believe that people are just shocked and can't believe how relatively, I think my premium this year was $442 for the entire year for $2 million of umbrella coverage. So, but it does help you sleep at night, I believe, for that. So what are the things that people need to know about as far as umbrella coverage?
Yeah, so your personal umbrella is for your personal activities and it is strictly liability. So if you do own a business, you do technically need two umbrellas, one that's written on a commercial policy form that follows your commercial activities and one that's written on your personal within your personal name for that, as well as like your personal trust and those sorts of things. So there are exclusions within the personal homeowners and the personal umbrella for business activities. And then we get into the nitty gritty of, well, hey, my kid drives for Uber. Is that a business activity? Or they cut lawns for the neighborhood. Is that a business activity? There does come this place of like age of, well, is it your 15-year-old, but there's still liabilities of if he, damages the neighbor's home. From an Uber perspective, there are endorsements that can be added, but if you're running like a construction company or a tax, firm, CPAs, those individuals, you do really need two separate types of policies for those protections.
And
Yeah, Megan, let's go ahead.
what would be some of the reasons that you would need two different types of policies?
Because the umbrella, they're just different forms. So it's like trying to mix oil and vinegar when you're trying
Yeah,
to mix.
yeah, I'm sorry, Megan, I didn't ask that question very well. Let me ask it again. So, what type of businesses would have the most liability, and what type of businesses would have the least amount of liability where they might think, well, it's really not even necessary?
That's honestly a hard question to answer because you would think like a CPA may not have a lot of liability because they just do sit at home, but they have a lot of professional liability and the advice they give and the documents they have. Even social influencers have a lot of liability if people go and buy a brand and then it like tarnishes all their skin and like ruins things, like they can be sued for that. So I would just say, as a business owner, just like I am a personal insurance expert, there are business insurance experts that can help you understand. But to your point, Bruce, I do think having an umbrella policy for the business, regardless of what you are, it still is cheap on the commercial side just to get $1 million to sleep better at night, and not have those what ifs cross over. Because again, people make decisions. Sometimes you do let your assistant drive your personal car to go get lunch for the office. And, in those situations, they're great, but at least you have two umbrellas and it's covered regardless. So they'll never overlap. They'll never be duplicate coverage, but it is something that I think if you're a business owner, you at least need $1 million in coverage.
On the personal side, talk about some of the, I know the property and casualties, homeowners and the auto has just skyrocketed in the last couple of years. So talk about some possible techniques that you would look at that could keep the insurance as affordable as possible without damaging too much of the coverage that you have. I just had the same conversation with my broker just earlier this week. And, I'm a big proponent of higher deductibles personally. I think the reason that most people, well, first of all, I don't think people even think about deductibles. I think they think, oh, the lower the deductible, the better I am because I don't have to come up with that money. Now, I do believe that there are some people that have to have very low deductibles for a couple of reasons. One would be, they're just not very good with their money, and so they don't have extra money. And then some people just aren't in a position in their life where they have extra money. But if you can cover the deductible, um, what do you think about having higher deductibles? And can you explain to the audience the pros and cons of that?
Yeah, so with auto specifically, I think people have been drawn into too many bells and whistles. They want the new car replacement, they want the fourth tire replacement, they want all these things. And really, when it comes to auto, you should just be worried about the liability. That is the biggest thing that, again, potentially loan, gap coverage to your point, Bruce, of if they can't afford to pay that difference if they're upside down on their car. But I see a lot of people that will carry lower liability because they want the new car replacement or the full glass on the windshield. And so I think it's important to strip down, get what you need, which is liability, but then also consider if you do have a luxury car, maybe you do need OEM parts, so you can take it to the BMW dealership and have it replaced. So I think it's a larger conversation. In auto specifically, there are new devices called like telematics, which allow the insurance companies to track you. And everyone that's going to say, well, I don't want someone tracking me. You're already being tracked in your cars and your cell phone. So this is just a way for you to get honestly personalized rates. They, how fast do you drive? How often are you driving? What times of day? So it goes into a lot of that stuff. And some companies give up to a 50% discount per vehicle that participates in that if you're a good driver. So I
Oh,
really
wow.
do highly recommend that. And all the carriers I work with, less than probably 4 or 5% of people actually see like a negative effect by participating in these programs. So in a whole part, it really is best and a great way for the consumer not to be looped in, because not to beat the dead drum with inflation, but cars are so expensive to replace. A bumper used to be to stop damage. A bumper now helps you back up, helps you park, has so much technology in it that to replace those now is $25 to $5,000. And so it is costing a lot more for insurance companies to make those repairs and do those things than it once did, even 5 or 10 years ago.
Yeah,
Yeah, Megan.
I actually did the telemetrics. My
Oh,
wife and I
wow.
did, and it did make a difference. And it's some of them are plugins for the OBD2, and some of them are actually on your cell phone. Ours was actually on our cell phone. And I know when I've talked about this with some of my clients, they were like, "Well, what if I'm riding in a car with somebody, because my cell phone is traveling at that time." Well, there is a way on the for each individual trip, you can actually uh, report on the cell phone that you were not the driver on that particular trip. And so there is a way that they can actually monitor that. Um, and like I said, I got savings from it, so I think it's well worth it. And it's very easy, very easy.
I think it's really great that you're sharing other areas to make sure that you're saving in cost and getting ideal coverage. I think health insurance can be a very similar situation where a lot of times people want to have all the additional coverages, or, as soon as we're covering all the preventive health care now without having to pay anything, the challenge that comes along with that is that you do pay a lot higher in premiums. And I think it's easy for people to say, oh, I get this for free, or this is covered for me, but not looking at the cost benefit analysis and not recognizing that you are paying for that. You're just paying not to the doctor or not to the auto parts replacement, to the auto dealership, but you're actually paying in coverage. And I love that you mentioned stripping it down and making it really the insurance component, making sure that you can not pay for all the extra things, but just pay for the actual damages. And so as you're talking about that, I was not even aware of the tracking option. So
And for young
cool.
drivers, that's like a no-brainer. And there's even cell phone companies now that give discounts for you for like tracking your drivers. So you can, again, not pay to go through a cell phone company, have it on your auto. And they even like alert if there's a car accident. So like there's so much more than just discounts that some of these telematic systems provide.
That's awesome. Sorry, my voice
No,
is
you're
going,
good.
but no, I love that you brought up as well the umbrella coverage, because when you are looking at the underlying coverages, I know you have to have a certain amount of underlying coverage first, but the desire can be to say, I want as much auto coverage as I can get and as much homeowners coverage as I can get. But instead of having the maximum coverage on those underlying coverages, pulling down the amount of coverage to what's required for an umbrella and then adding the umbrella on top can be a really effective tool and cost saving strategy that Bruce, you mentioned using. We're using that personally. We recommend that as well.
So Megan, talk a little bit about the difference between working with captive companies and brokers, and the pros and cons of both of those situations.
Yeah, and I love that you said pros and cons because there is good to both and there's difficulties to both. So, I think when it comes to the everyday person, if your net worth is probably under 2 million, the captive agents can do what you need them to do. They can get you the right replacement cost. They can do up to a $2 million umbrella. With a captive, you usually have like a State Farm or an Allstate where the policy forms are all very similar. It's your local friend that runs the office, so you still get to support your community. It's very uniformed. But with that, like a State Farm doesn't offer earthquake in a lot of states. And in Missouri
Mm.
specifically, that's a big deal. So that's where, depending on what your risk tolerance is, you know, may outgrow a State Farm even in a, you know, everyday household situation. So I think from just an ease of business, knowing the company, captives are great. They're very quick to respond. They can get you quotes usually same day. They have a team in the office all the time that can answer billing questions. They can sell you a lot of things under the sun. So they are a great one-stop shop. And if you don't have a complex lifestyle, you don't sit on non-for-profit boards, you don't travel outside the US, they're a great option and they're usually very competitive. So I think from that standpoint, there's a lot of good. From the broker standpoint, broker is a very single term that encompasses a lot of people. You know, people will think, well, if you're a broker, you all have the same carriers, which is so far from the truth. You know, different brokers have different appointments. They lose appointments, they gain them. They may have Safeco in Missouri, but not in Florida. And so being a broker today is a lot different than being a broker 10 years ago. The nice thing about brokers is they tend to work for the client because they have a multitude of carriers that they can shop. They can figure out, hey, this client again sits on a nonprofit board. So they need that ability to add that coverage to an umbrella. We're going to go to Chubb, but oh, hey, they don't. Well, then maybe we can just go to Safeco. So they have that flexibility to really cater to the client, as well as if that carrier, maybe a Safeco, decides to get out of the market, you as a client aren't stuck reshopping. Your advisor or your broker can do that for you and, you know, continue on with that relationship. So I do want to be clear, captives are on the client side. They fight for their clients. They're very good. The brokers just have a little more flexibility and not being tied to a specific company.
Yeah, I think that's a really important distinction. And also, when a client is coming to talk to somebody about insurance, they want to know not just do you have multiple carriers, but how comprehensive is this coverage going to be for me?
And, you know, how financially stable are the carriers? I think that was a question that no one really cared about, again, 10 years ago, that a lot of clients today are asking me, can they write a check if I have a claim? And most of the time it's yes, but there are, again, states like Florida where there's not admitted, and that's a different conversation.
Mm, very interesting. Okay, so that makes me wonder, like in the insurance, the life insurance space where there's a Comdex score and there's AM Best ratings, are we still seeing that on the same types of ratings? Fitch's, Moody's, are those the ratings for property and
Correct.
casualty companies as well?
Yeah. And you'd be surprised at the amount of personal insurance companies that are taking downgrades right now because they're having problems with reinsurance and getting
Mm.
reinsurance from a larger standpoint. So we are seeing financial downgrades across the board with a lot of carriers at this point.
Oh, wow. Okay. So, what would you say it means to invest in the right insurance policies? And I'm going to make a clarification here because we really look at insurance, especially in the life insurance space, where people say it's a good investment or a bad investment. Life insurance is not an investment. And the reason is that it's a safe place to store capital, especially when we're talking about infinite banking and storing up a cash value and having a specially designed policy. So, that's savings. That's not an investment that there's risk attached to, and you have a potential for an increase or a a growth or internal rate of return attached to that. However, I think what you're meaning is having the right insurance policies sometimes can be pricier than having something that's just off the shelf, and it is beneficial to you to go ahead and get that higher coverage, even if it feels like a stretch, because it's doing a lot of good for you. So even if we take that word invest out, what does that mean to you?
Yeah, so I think you guys were talking about earlier, you know, a lot of people skim over insurance. And what I like to remind people is we are your wealth defense. We're the first line of defense when something happens and it can all kind of be undone. And like we were talking about, insurance is a contract. And, you know, the reason why the government cares is because it's a contract that supports financial institutions. It really was never made for the consumer. It's evolved into a consumer product, but the first in homeowners product was fire because the banks wouldn't lend you money unless you had some way to protect it. So I think it's important to understand that. And so when I say investing, it really is, you know, what do you expect at the time of claim? Are you okay going to a off-brand, you know, repair shop to have your car fixed and aftermarket parts used? That's great. Then a Progressive, Geico, those companies are perfect for you. If you are someone that is looking for, I want to be able to take my car to the dealership. I want to be able to have a rental car until my car is repaired, even if that takes 90 days for them to get the new bumper in. That's where you spend a little more and go with a, you know, a Chubb or a high net worth and invest because your expectation at a claim is different. And so the policy language is really what kind of is the catalyst to all of that. And from a homeowner's perspective, It really is the difference in as simple as the HO3 homeowners form and an HO5 homeowners form. And the simplest way to explain the difference is with the HO5, it really is on the insurance company to prove that the claim is excluded because everything is covered unless specifically excluded. On an HO3 home form, only things that are listed are covered. So it's then up to the client to say, hey, this water backup is one of the 19 things here, so you're going to cover it. Where on the HO5 form, the insurance company has to say, well, hey, in paragraph 9C3, here's where the exclusion is for seepage. And so it really just broadens the form, and it really, makes the difference. Sometimes this is a carrier difference, so not a policy form difference. And how many bids do you have to get? I don't know if well, I know Bruce has had a claim, but some claims they'll be like, hey, you need to go get 2 or 3 bids. And then the adjusters will review the bids, and then they'll say, okay, here, you can have $10,000, 15,000, go, choose the one of the 3 that can fit that. With the right investment, they can say, hey, call your normal contractor, have his crew come over. Whatever it costs to do, we're going to do that. So again, I think it really is more about if you invest in nicer things in life, whether that's cars, homes, quality materials for your countertops, your flooring, your clothing. That's where, again, just looking at insurance a little closer to be like, do I want to become an insurance expert at time of a claim, or do I want, to have an insurance expert at time of claim is the big difference that you get with the right coverage.
So when you mentioned the 2 different forms, you had some letters and then a 3 or a 5. Do some insurance companies use one method and some insurance companies use the other? Is that what you're saying?
No, so most insurance companies have both forms available, but they naturally put the client on the HO3 because it's the cheapest. And, agents have been brainwashed to think that clients want the cheapest option. The only way they're going to close business if I present them the cheapest option. What I have learned is clients want value. They will pay for what they understand. And so they do trust that the agent is putting the best thing in front of their face. And so there's this miscommunication between the agents and consumers on like what they really want. So we do offer sometimes like, hey, right now you're on this HO3 and it's homeowners, form 3, and this is our option to go to the HO5, and here's why we recommend it. Some clients do that and other clients don't, but it's our job as insurance advisors to give them that choice and educate them and not make the choice for them. And I think that's where, and one reason I wrote this book was I want consumers to be able to ask those questions, because it's so many times, probably once a day, they get, well, I didn't even know that. I didn't know that was a thing. And so, and it's really on no one's part, because if you don't know what to ask, you can't ask the questions. And so that's where, again, this investing, not even just in the policy, but in the right partner that isn't just giving you, the lowest number, but having the conversation with you to get you to the right product. Because insurance, as life insurance, it has a lot more exclusions and conditions than coverages. So that's where a good agent knows their exclusions and their conditions. And so if you are the client coming to them and you fall within one of those, they can quickly say, hey, our product's not a fit. Where a lot of people don't want to ask questions like, what kind of dog do you have? Because if you have a pit bull per se, there's a lot of companies that exclude liability, but they just don't ask the question because they want the sale. So they're just going to say no dog in household. You sign the application, 3 weeks later, you're having a play date, your dog bites someone, you go to call your insurance company. They're like, oh no, there's an exclusion. You didn't tell me you had a dog. You didn't ask me about the dog. Well, you didn't tell me, so sorry for you. And then to Bruce's point, that's where they then go to the barbecue and say, I hate insurance. They didn't do anything for me. And it's just because there was miscommunication in the buying process.
Yeah,
That
I'm not
fundamentally.
saying.
Go
Yeah,
ahead, Bruce.
go ahead, Rachel.
Oh, I
Okay.
was just going to say fundamentally that goes back to the idea that people don't just want a lower ticket. I mean, you could say, well, if you're comparing exactly apples to apples and these are the same product, of course I'm going to pay less. But the problem is when you don't understand what you're getting, that's why people say, oh, I just want term insurance rather than a whole life insurance product. Well, if the idea is, well, they're apples to apples, well, then of course I'm going to pay less. But if you really understand what you're getting and you know the capabilities of what you're putting in place, then you're going to purchase the thing that best fits you. And I love, Meaghan, that you're bringing that to the table and you're not just saying, let's decide for people that they want to pay the least. Because if you're not explaining the true benefits and the coverage, then of course somebody doesn't want to pay more because they don't understand what the options are. Go ahead, Bruce.
Yeah, I mean, I think this is a very, very important subject when you're dealing with your property and casualty insurance person. If that person is just saying, "Here's the quote," I think you ought to seriously consider going to the next agent. And if they're not reviewing with you every year, I also think you need to consider going with somebody else, because there are way too much a lack of communication about how insurance actually works and what the coverages are. We haven't even talked about what I think is one of the biggest, and now this is on the commercial side, but one of the biggest liabilities that people are not covering, and that's cyber security coverages. And for all our business owners, that will take you, I think that will take you down faster than any other thing, even a slip and fall in your place. First of all, I think the slip and fall is going to be probably a primary coverage in your uh, in your insurance policy or contract. But cyber security, although it's getting more prevalent, it also we got to talk about the right amount, because that could be tremendous liability on your. So Megan, talk a little bit about your book now. Let's talk about what motivated you to write the book. How long? I'm just curious about how long it took you, the process, so on and so forth.
Yes, I will dive in that. The one thing I did want to mention, Bruce, because you were starting to hit on this, is what your agents work for you. They make 15 to 20% commission off the policies you pay every year. So I'm not saying call and yell at them to like rerun your stuff every year, but have a conversation with them. You deserve 15, 20 minutes of their time to talk about the kitchen remodel you did, the 15-year-old that, maybe getting a license soon, and just having a heart to heart of what's going on in your life. And so understand that, again, when you invest, it's not in just the policy, but it's the partnership. So whether that's the agent, the claims team that company has, you can spend your premium dollars wisely with different individuals. So, and then how I wrote the book, I honestly a couple years ago was at a job, and one of my bosses was like, "Hey, can you just write like a quick, 10 pager on like homeowners insurance?" And I was like, "I can probably do something like that, like a user's guide." And then started writing down everything. And then 3.5 years later, I have this book that's, 150 plus pages, because there's really just too much. And what I found was there's nothing out there for the consumer. And I've been part of the lost consumers. I was the bad 16-year-old driver that bumped into one too many cars, and my parents were getting the threatening notices of, you're going to be non-renewed if you have any more accidents. And I'm like, just call Geico, just do this. And my mom's like, no, Megan, like we want to stay with a certain type of company because these are our expectations. We just can't call any, so and so. So as a young driver, I learned very quickly about just one. And my parents didn't understand that when they filed these bumper claims that were $1,500, what it was really doing to their rates. Because then they got a bill that was $10,000 a year for 3 drivers and 3 cars. And this was like 10 years ago. And they were like, what the heck, Megan? Like, what's going on? And then, their agent had to explain, well, did you really need to file these claims? And so that goes into a whole nother rabbit hole of, really what is insurance for and how do you use it? Because it's not only about claims being chargeable today, it's about frequency. So I sometimes don't have the ability to place clients with new carriers because they've called the insurance company 3 times to have their roof looked at. And now the insurance company's like, nope, that's too much frequency, even though there's never been a payout. So I was also the young professional in the industry where I sat in a back office and I got a sheet. It's like, all right, Megan, you put in the client's information. We want to win as much business as possible. So they would have builder's grade kitchen, builder's grade bathrooms, 300,000 liability, 2,000 medical payments, $1,000 deductible. All day, every day. That's just how we did it. And what I didn't realize was, again, some of these people had very high quality custom kitchens, but I just, was taught to win the account. The difference between 300,000 liability and 500,000 liability is like $10 a month. So why wasn't I giving them more coverage for the dollars? And so being in that seat and then going to a firm that was really focused on risk management, I was like, holy cow, like I've just been doing these people an injustice, not on purpose, but because I didn't know better and they didn't know better. And so there was this lack or this, faith that people were putting in me. And I felt like it was my duty to give back to consumers, to give them a guide to understand what I spent 10 years learning and having conversations with people about. Like, Megan, I put my home in an LLC. Why am I, being sued? And all these little things that are so triggering to the insurance world. And insurance already is an icky word. And so I really wanted to take the ick out of it. And again, give consumers that passion for it again and understanding, because depending on where you are on the financial map, you may really need insurance, or you may not need it at all, because it really is just another bank. And so how you utilize it, and that is where my book came from, is I want people, whether you're out of college and you are a do-it-yourselfer and you just need a Geico, to still understand what liabilities they should purchase. Or again, maybe you are a C-suite that runs a $5 million company, but you don't know anything about insurance, so you don't talk to your personal agent about it because you don't want to sound uneducated. You now have a resource that you can feel empowered to have those conversations, because that's the other piece. A lot of professionals don't know about insurance, and that's the one place they don't want to show like their cards. And you guys probably see it in the financial world, where once you start talking, their eyes glaze over and it's just like too much for them to digest. And so I really want people to be able to slowly understand insurance and then apply it to themselves, so they're not looking around when the worst case happens, because I have seen insurance pay multiple millions of dollars to keep people in homes, to pay a family who lost a father in a drunk driving accident, to pay for a son, that passed away, to pay for a roof, or I think it was like a $650,000 Ludovici Tower roof for a client that was in the process of selling their home, and they couldn't close until the check got in the bank, and we were able to work it all out so the client could still close. So I've seen insurance keep lives together, families happy. And I understand why consumers don't like it, though. And so this book was really to help give consumers that revive of, here's what it's for, here's how to use it, and hopefully in an understandable way, because us insurance people do have a lot of jargon and tend to get too excited about our products. And so I do hope this will allow them to get as excited about it as we are.
Meaghan, I think that's really valuable. And before my voice completely goes, I wanted to make sure I make this comment that the idea really is that there is the risk that exists. It exists in the world because of the nature of life. And either you keep that risk on yourself or you transfer it. And in transferring it, you pay for somebody else to manage and take on that risk. And what that just means is that you are giving up the responsibility for taking on the full brunt of that risk impacting you financially. And that's one of the main reasons why insurance of all kinds really is so advantageous to you, not only to protect you, but also to help you be able to move forward with a lot more clarity and the ability to move fast with confidence. And it was explained to me one time like this: if you were in a dark room and you couldn't see, or completely just had no visibility, you would be very hesitant to make steps forward. But when you have broad daylight and you can see everything and you can see way far ahead, you have the ability to move a lot more quickly and make better decisions because you have that ability to see. And really, insurance helps you do that, see better, because you're not at that risk or that worry of potentially having everything taken away from you.
Love that. Yes.
So Meaghan, thank you so much for joining us today on the show. And can you let us know, where can people find you? And make sure we spell your name Meaghan, so a different spelling of Meaghan. Make sure that you look her up, Meaghan, and your last name is Dowd, Dowd. Can you make sure that our audience knows how to find you and get your book?
Yeah, so you can find my book on Amazon, and I also have a website, protectingyourlifestyle.com, where you can buy the book. I also post blogs regularly. We can email if you have questions. My book also does have on one of the chapters a lifestyle questionnaire. So again, I think it's a great starting point for people just to go see if they do need to have a different conversation with their brokers. But yeah, LinkedIn is also a great place to connect with me further.
Awesome. Well, thank you so much, Meaghan, for joining us. And I loved that you just shared so much. Thank you for being an
Thank
open
you.
book today and really letting us probe your mind and understand insurance from your perspective and really how to protect your lifestyle. Bruce, is there anything that you wanted to add in before we close out today?
Yeah, and I think one of the great things about Meaghan, her attitude is about protecting your lifestyle. And a lot of times I hear this all the time: I don't want to be insurance poor. And um, as Meaghan said, my wife and I had a terrible, complete loss of our home in 2014. And if I would have had that attitude about being insurance poor, I wouldn't have had the insurance company just come out and write 2 checks for the policy limit and just hand it to us. It was very easy. We wouldn't have had the cost of living adjustments rider on the policy. We wouldn't have had the replacement cost rider. We wouldn't have had extended stay provisions where we could actually get accommodations to stay in a like kind living arrangement to our home. So it took a very tragic situation, but we lost a lot of emotional memories and so on and so forth, but we did not get hurt whatsoever financially. And that's a very peaceful way to live your life. And in closing, I know I've used this before, but in my closing today, I'm going to say, if you do not think that insurance actually helps you live a more stress-free life, then simply cancel your car insurance and drive across town with it without any insurance. And you're going to live your life completely differently. Unfortunately, Megan, I didn't tell you this part. I actually got hit by an uninsured motorist several years ago, and it was a really weird situation where the uninsured motorist actually hit the person behind me and shoved the person into me. That's how hard they were going at a stoplight. And it was because they were texting. They were supposedly late for a job interview. So this person already had chaos in their life. Because if you're trying to get a job and you're late for the job interview, I mean, you really don't live a nice, quiet, calm life. And they had borrowed somebody's car. And not only did they not have insurance, but the person they borrowed the car from did not have insurance. And it was a fiasco.
Well, 1 in 8
Um,
drivers does not have insurance in the United States. So it's a
yeah,
larger statistic than I think people realize.
yeah. So living your life stress-free, people don't realize the value of good insurance to be able to do that. And you can just do much more with your life and live a lifestyle that's very easy on you emotionally. So I would encourage everybody to take this very seriously and reach out to somebody and interview different people to make sure that you are getting what you believe you should be getting.
Absolutely. Bruce, I had forgotten Lucas, my husband, was also hit by an uninsured motorist, and we had just bought a new car, and it was amazing that the insurance company was able to take care of the entire thing. And I believe that we not only had we had a replacement vehicle within like a week or maybe 2 weeks. It was very seamless, but yeah, it was a hit and run and totaled our brand new car. So
Oh no.
yeah. Yeah. So thankfully no one was hurt or injured and he was by himself and we didn't have kids in the car or myself. But it's crazy. You mentioned 1 in 8 drivers are uninsured, which means you need to make sure in your coverage that you have adequate coverage for uninsured and underinsured motorists, because not a lot of people understand the value of insurance. And if they don't understand the value of insurance, they probably don't have adequate coverage to handle the situation where they're at fault in an accident that impacts you.
And just one quick piece on the uninsured and underinsured motorists, it also covers you while you're a bicyclist or a pedestrian and you're hit by an uninsured driver. So again, people that like to walk, ride bikes for fun, have young families, like you just don't know what's going to happen. And so it's also broader than just in your vehicle.
So valuable. Okay. Definitely reach
Thank
out
you
to
all.
Meaghan. Yes. Thank you so much for joining us today. This has been a great conversation. I hope that everyone listening has got great value out of this. And we have people commenting live that we asked you some of those questions. And in addition, we know that people will be listening for a long time afterwards. So thank you again. Go get Meaghan Dowd's book, Protecting. Is it Protect or Protecting Your Lifestyle?
Protect. The website is Protecting because I didn't buy it in time to not have the ing, but the book is Protect Your Lifestyle and the website is Protecting Your Lifestyle.
Awesome. Well, go get her book and check out her work. And thank you so much for listening today. Thanks, Meaghan, for joining us. Thank you, Bruce, again, for just sharing your perspective and your experience when it comes to insurance as well. It's extremely valuable. And in closing, please remember, success leaves clues. So model the successful few, not the crowd, and build a life and business that you love. We'll see you next time.